Everybody, we're back with another episode here with the Mitten Mortgage Lending Podcast. Still looking for a better name if possible, but I'm Mac. This is CEO and owner Chris Savanik, and we're going to jump right into it. A lot of talk lately on the market, and with the Fed meeting coming up this week, and people are talking about basis points being cut in September, and Chris is here to explain basically how some of that works and have those rates already jumped down and have those cuts already taken effect?
Yeah, so good questions. I mean, picking up pretty much where we left off last time. I know last time we chatted, the 10-year had just finally come below 4 for the first time in a really long time. So the 10-year Treasury is a decent indicator, kind of like we talked about, of what interest rates are doing. So that thing's coming down in theory. Hopefully, most of the time, rates are also coming down. As far as an update now from when we talked a month ago, like we said, it was finally below 4 when we last talked. It's almost down to 3.5 now. So we're continuing to see improvement, I would say, on that, which is good for rates, and it has been good for rates. Rates have steadily continued to climb down since we last talked, and hopefully that pattern just continues. I don't know. We're seeing rates right now mid 6s, low 6s. We've even snuck some people into the 5s if it's in that perfect scenario. If you've got a ton of equity, you have phenomenal credit, right. All of those things. But rates are definitely finally improving.
And a lot of people are talking about the rate cut that's coming in September. So we've tried to explain it to a few people that basically that rate cut that they said is coming in September, we've already had.
Yes, pretty much for the most part.
There could be more coming up.
Most likely, it's already here. And so what Mac's talking about is there's a whole bunch of speculation. Every time the Fed meets and they have a Fed meeting and they talk about what rates are going to do, if we're going to decrease them, if we're going to increase them. For the longest time, we know for the last couple of years, every Fed meeting has been
negative news.
Negative news. Negative news in the sense that rates are going positive, that they're going up. Right? Rates are getting worse. So that's been that's been the meetings that we've been listening to for the last year and a half or so, probably. But what Mac's talking about is there's a lot of speculation that when the Fed meets next time, they're going to say that rates are getting cut or that rates are getting dropped. But here's the thing, kind of like Mac mentioned, a lot of that is priced in already. And what we mean by that is, let's use a large corporation. Let's use Apple for an example, or Sony. When Apple releases the new PlayStation, when Apple releases the new iPhone, on release day, Apple stock doesn't go up. It doesn't skyrocket. In fact, usually it probably doesn't even move. Same thing with Sony. Sony comes out with the new PlayStation. That day, that release day, stock's not going to rise because everyone knows that it's coming. It's already kind of been priced into those stocks. So when
the stock went up when they said they were going to make
the stock went up when they said they were making a new iPhone, or when someone leaked that they were making a new iPhone, or when someone leaked, in the back end that the new PlayStation was going to production and that they'd be coming next Christmas, and people would be knowing. So exactly what you said, that was already done.
Yeah, the rate cut in September has already been leaked.
The rates cut in September, people have known about it. We've been talking about it for forever. So it's that rate cut that we think is going to happen is probably already here. Now, what could happen? The meeting could go not well, and they could meet and say, hey, there's no rate cut. So if that happens, I would expect to see rates jump because everyone thinks they're supposed to be cut already. So we're waiting on that to happen. Now, the good news that could happen is they could say, hey, we were going to cut a quarter point. We're going to cut a half a point, or we're going to cut 3/4 of a point. So there could be an improvement, but what is supposed to happen is already priced into the market, and we're already seeing that reflected in rates, and that's why these rates have already started to come down, and they're already much better than they are. We've had a lot of people refinance already.
Yeah. So if they say later on this week that they think they're going to cut them by 50 basis points, 25 of that basically it's already been cut.
A good chunk of that's already there,
but it still should decrease a little bit.
It should decrease a little bit, and what I also always tell people too is it's never, I shouldn't say never, but it's almost never immediate. If they come on next Thursday and they say, hey, we were supposed to do a quarter point, we're going to do a half a point, I wouldn't expect at least Thursday at 4 p.m. for our rates to be a full quarter point better. Like investors, people in the back end, all these markets, like people have to catch up, and then they have to make trades, and then things have to happen, but yeah, I would fully expect if we get better news than expected, then I would certainly hope that rates do continue to drop down a little bit.
And this is taking us into, these rate cuts. Obviously, it helps potential buyers in there. People that are approved can be maybe pre-approved for more than they were looking, but it also helps out, obviously, the people that have bought in the past year and a half to 2 years. A lot of those people we're looking at refinance opportunities, and that's where we see a lot of people that already have that equity in their home. They're not bringing the cash. They already have equity in their home because of what they put down and the values of those homes increasing. So using that equity for a variety of things, obviously to bring down their interest rate, but also to pay things off, which is something we've seen as well.
Yeah. So I mean, we're going to segue here. We'll talk about our loan of the month next, and Max got a great one, kind of just expanding upon this. I know he had a client. They had two mortgages, it was a first and a second.
Yeah, we
right?
just get into it. Yeah.
Yeah.
So they had two mortgages on this property. Okay. They had a mortgage on it, and then they took out a line of credit to go buy an investment home. So they had two lines basically that were a mortgage on the property. They also had two credit card payments that were, I would assume, pretty close to max, and the payment on those things were huge. We're talking $800-900 a month for both of those. They were able to consolidate everything. So the two mortgages and the two credit cards, pay all of that off, which if you looked at what they were paying per month, it was about $3,200 for two credit cards and both mortgage payments. By consolidating that and using the equity of their home to combine all that and pay all those things off, their new payment's now $1,800 a month. So it's like $1,400 a month that they're saving. So again, when we're talking about using that equity, this is the example basically that we are talking about. And they were making $900-800 credit card payments on a credit card that they probably owed $26,000 on. Like we talked about, they're not even probably making a dent in that thing.
They're probably not. They're probably paying interest only at $800-900 bucks a month.
And definitely with the HELOC, they're paying interest only that they have.
Yep.
So those numbers, you're not gaining anything really by just paying that. That's not going down like it should. Where if we do this, we consolidate it, those are wiped away, they're gone, and you just have basically a normal mortgage payment that a lot of us have out there, and that again was able to decrease what their monthly payment is, and they're taking more money out right now to go purchase a second home up north that they're going to use the funds that they're going to get with this cash out refinance to use to pay for the down payment, closing costs, all that at the second home up north. So that's what we're talking about with using your equity in a smart way.
Yeah, use your equity. If you don't do anything with your equity, it's essentially dead money. Mm-hmm. So this person took their equity that they were sitting on, and I mean, like you said, HELOC, they were going nowhere because they were paying interest only on a HELOC, right? Mm-hmm. So they had a HELOC on their current primary that was almost never going to get paid off. Yeah. If nothing changed, it was never going to get paid off. It was never going down.
Credit card interest rate was probably in the teens. At best. At best.
At the very best. It was probably closer to low to high 20s. Yeah. So it was somewhere between 21 and 29%. So you took it from two credit cards that the balance was not going down on, and a home equity line of credit that the balance was not going down on, and they were paying, you said, over $3,200 a month.
Yeah, right about
for
$3,200.
Their primary mortgage, their HELOC, and these two credit cards. And now, because of the equity they had in their home, you combined them all, and now they're paying $1,800, and their balance is going down.
Yeah.
And they're getting somewhere. Mm-hmm. So, and like you said, and they've got extra cash. They're going to go buy a vacation home up north. And even when that, so really, truly, what you did with their equity, let's just say their new vacation home payment is $1,400 a month, because you're saving them $1,400 a month. I don't know if it's going to be, but you essentially just took their equity, reworked all their finances to where their monthly outlay could still be the exact same, only now they get a vacation home with it instead of just paying interest to credit card debts.
It's going to be even cheaper because the vacation home payment's like $1,000. So they're coming out $400 ahead and they gain a vacation.
So their total monthly outlay as a family is roughly, because they got to buy their home still up north, but their total monthly debt and monthly obligations as a family, as a household, they're going to save $400 a month. But because they use their equity wisely, they are getting a vacation home. Yeah. So saving $400 a month, and they have a new vacation home.
Yeah, and using, and there's even in other scenarios now. I've had people call a client that's purchasing a car. They kind of downsized, bought their forever home. Yep. And they used all cash for that, so they had no mortgage on it. Then they just recently went to go purchase a car because they didn't want to have a car payment, so they wanted to purchase that, pay cash for it, and they're going to take out if they're fine with having a payment, I should say, but the car payment was going to be about 7% for them to do that. they're going to take a cash out refinance on their primary home now, which that interest rate is going to be in the mid fives as opposed to the high sevens that they were going to be paying with the car payment. So they're going to take out the cash and pay the car off with it because it's cheaper to get a mortgage interest rate than it would be the car one right now. So again, there's all kinds of different ways that you can use the equity.
Yeah, and like we always say, like if you guys are curious or if you have questions or if you, maybe that doesn't apply to me or maybe it does or I'm not sure, just call us. Like,
ask, yeah.
Like we're so happy to help and just answer a couple questions. It's not going to take very long. And the best part, I know we talk about this all the time too, don't feel like by calling us, you're going to get forced into doing something that if it doesn't make sense, we're literally just going to tell you, hey, I don't think, if I wouldn't do it, I'm going to tell you, hey, I wouldn't do this.
Yeah.
Here's what I would do.
Yeah.
Doesn't mean I'm right or wrong, but I would tell you what I would do for sure.
Yeah.
So call us if you have questions. The worst case scenario is nothing happens with a refinance. The worst case scenario,
you keep doing what you're doing.
Keep doing what you're doing.
Yeah.
The best case scenario, we shave some years, we shave some term, or we shave some payment. Like we shave something off your mortgage, or you get some cash out, or some of both.
And overall, like, I mean, that's what we've been dealing with. I would say for the past 2 or 3 months, there's been a lot of people that have either we've reached out to clients where we thought they might be close for refinance. I know I've had a few, 5, 6 of them that I've reached out and said, hey, send me a mortgage statement. I think it might be time to refinance. And we looked at it and it wasn't yet. And I'm like, hey, it's still not there. It's getting close, but it's still not there. We're going to wait because even though I think we could save you 50, 70, $80 right now, I think if we wait a little bit, that could be 150.
Yeah, if we hold on for 60 days, 90 days, 30 days.
So let's wait. Yeah, we're not going to force feed you or twist your arm into doing something that we wouldn't do ourselves. We're trying to make good financial decisions for our clients, for our family, friends, the people that we help out. So, like I said, that's not going to be something we're going to force you to do.
And I know this isn't part of this necessarily. We weren't necessarily talking about this. We've talked about this in other shows, though. But back to whether or not this makes sense. Look, rates are coming down. So what's going to happen? Refi companies are going to start buying information, and they're going to start calling people just based on what your rate is. They're going to call you and say, hey, we can do this, we can do that, we can get you a better rate. Those people will twist your arm. Yeah. They will force you into something that you probably shouldn't do. And where I really wanted to go with this is, we're not going to have you do something that doesn't make sense. And there's a lot of things that may or may not make sense about a refi, but points are a big one that I want to talk about right now. I'm not saying that you shouldn't pay points. There are going to be people and purchase and refi scenarios right now where it makes sense because of whatever's coming up in their life or whatever just happened in their life. There are some people who should pay points right now. There are. However, I would say the vast majority of people that are refinancing or purchasing right now do not pay points. What is the general thought in the market right now? And what did we just talk about? Rates are coming down. Mm-hmm. So if rates are coming down and rates are going to continue to come down, don't pay extra money, don't pay points up front for something right now that you're going to be able to get for free in 3 months, 6 months, a year, whatever the case may be.
And we get asked all the time, like, if I refi now, when can I refi again? In 6 months.
In 6 months.
Yeah.
Refinance again.
So if you refinance now, if you can save, and I've been telling people this too, some people, they want to wait to see. Well, I'm like, we can for sure save $200 a month right now. Do we want to for sure start saving $200 every single month right now? Or do we want to cross our fingers and hope that 8 months down the road, 9 months down the road, we can save $300? Well, if we can save $200 now, we might be able to save an extra $200 9, 10 months down the road. So we can refinance again if you wanted to. But take advantage of what you can save now if it is significant enough that you are going to see the savings. Yeah. Like we said, $70, $80, that's probably not going to be enough. So let's wait for that. And let's definitely not pay points where if we paid points, we could get from $70 savings a month to $200 because you're just paying that to get to that.
You just bought, yeah.
Yeah, we wouldn't want to do that.
Yeah. So back to what we said, like call us. If it doesn't make sense, it doesn't make sense. No harm, no foul. You're in the same spot you're in. If it does make sense, though, we'll talk to you about it. And the future will be part of our conversation. Like what makes sense for you to refinance? It might make sense for you to refinance right now. But if during our conversation, if you tell me you and your husband are pregnant right now and you're having another child and you're going to need to move in the next year, that's part of our conversation. So like your life, what's going on, your finances, all of it go into whether or not it's a good idea for us to refinance. So it's not just strictly based on your rate. It's based on a lot more than that. But just call us. Like we'll run through it. If it makes sense, we'll do it. If it doesn't, you're in the same spot you're in.
Yeah. So we talked a lot about the abilities now with where the market's at, with refinances coming up and what to do. And if you have a home purchase, if you think you're going to be expanding, what you're going to need to do. So we're going to take a short little break here, and we're going to bring somebody back that's going to help guide us through, and I know they help us guide us through on what you're going to need to do to get yourself ready for that refinance or for that purchase. So we're going to take a quick break and be back in a second. All right, so we're back now with our guest, Katie here, who's a processor here. Chris likes to call her the secret sauce of the office. A lot of people say that Katie's their favorite person to work with here. They never know what she looks like because she's not on Facebook, but here she is, Katie, the processor. And I know me and Chris are going to talk about some of the things that we deal with and that we line up for each loan, and then kind of Katie takes over from that part.
Yeah, so like Max said, Katie is probably one of the best parts of Mitten Mortgage Lending in terms of feedback from clients as well, in terms of when they get to work with it, which we're very proud of. I know a lot of times people dread getting a mortgage, and they dread it because they say the process sucks. Mm-hmm. So we're very happy. Obviously, if you check out our Google reviews, she's mentioned in a ton of them as well, which I think is massive. So we're very happy with that. She's been with us since January of 2021, so she's seen a lot of loans come through the door. She knows a lot in terms of processing your loan. She's going to be extremely helpful. So again, Katie's the leader of our processing department, and like you said, we'll talk a little bit about what to have ready. I mean, I know I tell everyone when they're purchasing or when we're pre-approving them, give us your pay stubs. Give us your W-2s.
Yeah.
Give us your bank statements.
Yeah, and these are things we want to have ready for when we do come time to purchase, do refinance. Bank statements, like you mentioned, bank statements we don't really use for the refinances, but definitely pay stubs, W-2s, IDs, things like that. Is there any other items that you see often for refinances?
The current mortgage statements or like current items that you might be paying off. If people are paying off like credit cards, HELOCs, the mortgage as mentioned. I would say that's about it, honestly.
Yeah. I mean, so refis are going to be pretty simple. I know a bulk of this, a lot of stuff starts happening for Katie when after that. So Mac, a banker, anybody that works here gathers the initial documents. We gather up what we need. We submit it to underwriting. That is really when Katie takes over. Now, your banker never disappears. I never go away. Mac never goes away. Whoever you're working with, we never go away. However, that's really when Katie and or someone on her team, that's when they really dive in and they really take over your loan and they become your point of contact for the loan once that thing gets submitted to underwriting. Tell us a little bit about kind of what people should expect when that starts to happen.
So with the processing department, we are the liaisons between underwriting and the borrowers. Underwriting, they can kind of say some verbiage to us where they're trying to meet federal guidelines, and we kind of dumb it down a little bit so that we can help our borrowers understand exactly what underwriting is looking for. I know the federal guideline talk sometimes gets a little wonky, so we'd like to try and tone it down a little bit just so the borrowers understand, and just giving kind of a breakdown of what they're looking for. Sometimes there might be like a gap in assets or pay history that we need to provide. And, we tell them we need an extra pay stub, but then we also explain why and why we need that. We're meeting the federal guideline, how we're meeting that federal guideline. At the end of the day, that's honestly what a lot of the loan conditions that I come across is I'm just trying to meet those federal guidelines for our borrowers. The bankers have set the loan up with the interest rate, the loan amount, all that, qualified everyone. But now our job is to get us to the closing table, and we try and do that as fast as we possibly can.
Yeah, and I would say, and I think part of what she's trying to say too is, I'm kind of likening it to what Mac and I do. So Mac, myself, any of our bankers, we take the really confusing mortgage information, your payment, your cash to close, all this stuff. It's very confusing. It can get complicated or get weird. We try to take that and simplify it so that you guys understand it. So we help you get you set up. And then what Katie's saying, when underwriters are following federal guidelines and when they're going through all these things and when they're going those same confusing, annoying, wordy guidelines, I think she's saying underwriters have a tendency, at least when they deliver it to you, to deliver you a very, not necessarily confusing, but what could be perceived as confusing, a very wordy, a very technical piece of paper that says, hey, your borrower needs all these things. if we just sent that along to you guys as the borrower, like
borrowers would be overwhelmed.
Like I know some people do, and I know this is out there.
Yeah.
Some people, it's because it's easier. You don't have to redo anything with it. Just forward it, right?
Yeah, copy and paste.
Yeah, copy and paste. So if you do that and forward that over to your borrower, which we don't, I know you don't do that, but if we do that, very confusing, very overwhelming, very frustrating, very why the hell do I need this? I already gave this to you, things like that. Katie,
the guideline that says identification is can be overwhelming.
Yes.
And Katie normally breaks that down. Just send us a picture of
the
your
word
ID.
that says I need your ID is like 3 sentences long. Katie will just tell you we need your ID.
Yeah.
Or
Unexpired
she might tell you,
ID.
hey, you sent your ID and it was expired. We need another one. Instead of you saying, well, I already sent it.
Yes.
She might look and say, hey, I know you sent it. It was expired. So send us a new one. So I know the underwriters, again, they're following federal guidelines. They're listening to Fannie Mae. They're listening to Freddie Mac. They're listening to the FHA, the VA. And their guidelines are almost like laws. Like it's laws that are written, right? And we all know how laws are. You usually need a lawyer to help determine those. So Katie's definitely no lawyer, but she will happily break down, help you understand this. And it can get frustrating. Like, I mean, I've done plenty of loans myself. I know Mac's done loans. I've done plenty of loans, and it can get frustrating if you don't know why you're being asked for something. Or if you say, hey, I gave you a pay stub. I gave you 2 pay stubs already. Why do you? I gave you 2 pay stubs and a W-2 already. Why do you need my year-end pay stub from last year? Well, Katie will explain. Hey, you had commission income. We needed to see your W-2 doesn't break anything down. Your W-2 just says how much money you made.
Right.
So the underwriter needed your 23 year-end pay stub because they needed to see the line item for how much commission or bonus or some sort of
Overtime,
fancy pay was on there. So we're going to let you know that. Katie's not just going to say, send me another pay stub. Because you're going to go, I did. I sent that already.
And we say it's a burden for, or it can be overwhelming for the clients. She kind of eats a lot of that stuff that's overwhelming, so it's not overwhelming for the client up front by, if an underwriter says they want 3 things, she's going to try to get it to where maybe we only need 1 thing or something like that. So again, her job, obviously is to collect everything, get us to the closing table, but honestly what she ends up doing is just making it easier for the client by doing that. So clients might say, man, that was so smooth and that was so easy, but they weren't here in the office seeing her on the phone for the last hour arguing with an underwriter about it.
And
she's trying to take some of that burden off the clients. She does a great job.
That's spot on. It's not uncommon, and I'm happy that our clients don't see it. They don't need to see it. It's our problem, not theirs, right? But it's not uncommon for a conditional approval to come back from an underwriter with, I'll say 3, there might be 6 things on there that they don't need. But what we try to make sure of, and what Katie and her team do a great job of, is they don't, just like we already talked about, they don't just copy, paste, screenshot, and rip it over to you and say, hey, send this to us. They go through our banker's notes, so they'll go through Mac's notes, they'll go through my notes, they'll go through whoever originated the loan, they'll go through their notes, and we'll let them know what we have, what's already there, what they should be expecting, what we might be looking for. And if there is something that underwriting asked for that was already given to underwriting, or maybe underwriting missed, they're humans too. They make mistakes sometimes. If they do miss something, Katie brings it to their attention, make sure that they check it off the list. So when she comes to you, there's a good chance she's already been back and forth with the underwriter on a couple times. If we're asking you for something, it's because we need it.
Yeah.
It's not because there was an error and someone thought we needed it. If Katie and her team are asking you for something, it's because we actually need it. I can promise you, we try to push back to provide as little documentation as necessary.
And I know it's not just underwriters. Who are some other people that you have to deal with to get us to that closing table that clients may not realize?
Well, just to kind of touch base on what Chris was saying, what you guys were just talking about, there's a lot of puzzle pieces that us as the processors, we collect and put together. And there is more than one way that we can clear conditions. Sometimes, if they're looking for a mortgage payment, sometimes I can find that mortgage payment in their assets, on their credit report, on the payoff letter. So there's a lot of different ways that we can get our conditions cleared up. Just like how Chris said, we might get 6 and then all of a sudden I send you the conditional approval and there's only 2 items that I might need because behind the scenes I've been talking to underwriting, pointing out things that, like Chris said, they're human, they may have missed that. But then the other people that I deal with, besides, sometimes I have 2 borrowers and then I have the realtor and then I have the title company and then I have the insurance agent and then I have the HOA and then I got my bankers. So sometimes there's like 6 to transaction coordinators too. So sometimes there's 6 to 7 people.
Lawyers, CPAs.
Lawyers, CPAs.
I was going to say, it's more than you just communicating with
Yes,
underwriting.
there
It's you communicating with insurance agents, title agents, sometimes
Yes.
closers.
It's a lot of behind the scenes.
And a lot of times too for clients, we're like, if we need insurance or if we need you to talk to the CPA, for us it's really simple. Get us their contact information. We'll CC on everything, but she can really handle it, and all of our processors can handle it with them being that point of communication rather than having the client go chase this down from your CPA, go chase this down from your new HOA that you don't even know anybody yet.
And what we'll see a lot there is client will go chase something down. They'll chase down their tax returns, but we're missing a form or a page or another one. Hey, if
give us the contact information in our process.
Let us get involved, and we'll literally just take the headache right off your plate.
Yeah.
Just let us do it. We'll get with them. We'll get exactly what we need. We'll get the exact documents. We'll try to make it as easy as possible for you. But yeah, I know it's a lot more so, and that's the thing too. I know when you're working with your processor, they are going to be in communication with everyone. I mean, literally everyone in the transaction, and we more than likely not are too, but in processing is really where the mortgage is made and really where everything happens. And yeah, Katie or anyone on our processing team, they're going to be in touch with both agents, the insurance agent, potentially 2 title companies, usually 2 different title companies who are both going to schedule a closing, so they're communicating with them. I said insurance, title. I mean, attorneys,
HOAs, attorneys, CPAs.
HOAs. I always forget about the HOAs, condos. If you're buying a condo, there's a whole list of things that needs to be done for your condo.
Yeah.
So there's a lot
condo
of
federal guidelines.
there's a lot of communication.
AMCs,
Appraisals, appraisers, appraisal management companies. There's the list goes on. So they're in communication with a lot of people. But I can assure you, don't just take my word for it. Read our Google reviews. Go find Katie's name, and I mean, there's it's not just Katie. There are other processors listed in our Google reviews, and that honestly is, to me, is one of the best parts about working with Mitten Mortgage Lending. If you go look at, I would say, just about any other mortgage company, sure, you're going to have your good reviews. You might have your bad reviews. I would say the bulk of bad reviews from mortgages. Sure, some of them come from a bad originator or someone messing something up. That does happen. But I feel like a lot of bad Google reviews that I've read throughout my years are...
The process sucked.
Oh, yeah, Mac was great to deal with, but man, once my loan got into process, this was a complete and total nightmare. And I'm super proud to say, and it's a testament to all that Katie's done with the department for processing, but our processing department is... Our banking department is great. Our bankers, our loan originators are great, but our processing department might be the best part of Mitten Mortgage Lending.
Yeah,
Thank you.
I think a lot of agents would contest to that too. A lot of agents that we've worked with either numerous times or the first time normally say about how great the process and the communication is.
Yes.
That all starts there.
I think my favorite compliment from a realtor was when one of them called me their favorite bulldog, because they knew I would get their client to the closing table.
You would get it done. Yeah.
She's like, "You're a bulldog. I know you're going to take care of it." So
Shout out to Kim Carlson.
Yeah. Shout out to Kim Carlson.
Yeah. So, all right, that wraps up today's episode. Hope you guys had some good, or could take away some good information from this. Like we talked about before, just to give a quick recap, market continue to slide down. More news to come at the end of this week. Loan of the month. Use that equity that's available, whether it's to pay off credit cards, HELOCs, car payments, whatever it might be, that can make that monthly total that you owe each month a little bit smaller for us. And then the processing of Mitten Mortgage Lending and the way we go about our business leads to a smooth and easy transaction for everyone involved. So, Chris, anything to add?
No.
We're out of here.
That's it. Just call us with questions, like we always say, guys. There's no dumb question. This is your mortgage. This is your house. It's more than likely not your biggest asset. If you have a question, call us. We're happy to help.
Yep. We're here to help. Hope to hear from you soon, and we'll see you guys later.